Welcome to ActivTrades Monday Market Matters webinar for the 21st of October 2024. It's Paul here, and here we are today to talk about how to trade the US dollar. Generally an interesting topic anyway, especially if, like me, you like to focus on operating in FX markets. But of course, we have looming over us the US election in what's that, about sort of a couple of weeks' time now, and naturally everybody is curiously interested in what that might have in terms of impact on the US dollar, and we'll talk a little bit about that today. So as always, what will we talk about today? Not unsurprisingly, we'll talk about the news, okay, when it comes to Monday Market Matters. That's how we always start. But we're going to talk about the US dollar, all right, and we'll talk about why is the US dollar so important, what role it plays in financial markets, and how you can use it in your trading, and talk a little bit about ways for you to be able to trade it. So there are many different ways that you can trade it through ActivTrades on both the ActivTrader MT5 and MT4 platforms, and we will have a look at that later on in today's session. And then of course we'll always have a little look at the live markets themselves. It would be interesting to know, those of you joining us here today for the live session, how many of you actively trade or analyze the US dollar in your own trading and investing endeavors. Okay, you put that in the chat box. I'll be fascinated to know what your own experience is. I appreciate that we always have a wide range of experience here, from complete beginners to people who've been trading for a good while. So it's always great to hear and understand what others' experience has been. There's something that we can always learn from, and and I'm always very keen to sort of push that and take that on board. So Lucas says he looks at the DXY, the Dixie. Okay, that's good to hear, and we will certainly have a look at that and a chat about that later into our session today. For those of you who don't know me, my name's Paul. I've traded for many years, traded for funds, traded for clients. Primarily, I like to trade FX indices and commodities. Although I have traded other asset classes and instruments, that's where I tend to find myself focusing. I tend to be a trend trader for my longer term swing and position trades, and I tend to be a reversal and a mean reversion trader for my shorter term intraday and scalping trades. So all of which experience helps me today when we look at and talk about the US dollar itself. So I appreciate that we always have new people joining us. You are always very welcome. Okay, Monday Market Matters is ActivTrades start of the week webinar, whereby every Monday, 2 o'clock London time, we look to cover the major news that is coming out for that week ahead. We'll have a look at an education piece, which is today all about the US dollar. Always have a little look at the ActivTrades platforms and tools that you have available to you as an ActivTrades client. And then we'll finish off with a look at the live markets as we head into the US session, and the US markets will be, what's that, opening in about 24 minutes time. So we always have plenty to talk about. So let's crack on, and let's look and talk about the news for the week ahead. So this week is a relatively quieter week, okay, compared to the last couple of weeks. Now, I appreciate that that might all depend upon how you define relatively and how you define quiet. But when we're looking at what's really going on today, we've got very quiet days today and tomorrow. There's really nothing coming on today. Tomorrow, whilst there's no major formal economic news, what we do have is the Governor of the Bank of England, Mr. Bailey. He'll be speaking tomorrow afternoon, and of course traders will be intrigued to hear what he has to say for himself, especially after we had a glut of UK news last week. It's when we get into sort of kind of Wednesday, Thursday, Friday that we start to get economic news coming down the pipe. And of course, probably the major one, certainly for Wednesday, is not only is Mr. Bailey speaking again, but really most people will be interested in the Canadian Bank of Canada interest rate decision. Presently, forecasts are that we will see the Bank of Canada cut interest rates by 50 basis points from 4.25 to 3.75, and not unsurprisingly, traders will be interested to see, whether that holds true or whether there is a difference between the forecast and what actually occurs. Probably Thursday is the busiest week, and a lot of that is due to we have a sort of a glut of PMI, Purchasing Managers Index, data coming out. We've got the French PMIs, the German PMIs, the UK PMIs, and the US PMIs coming out in the afternoon. So, and it is both the manufacturing and the services PMI flash, and so as I said, a glut of information. And whilst the PMI is a kind of backwards-looking, lagging indicator, it still has a great impact when we turn to look at the health of those particular economies, especially in terms of the American one, where, as I said, we're going into the US elections shortly. So Eric says, what is PMI? PMI is Purchasing Managers Index. I think it is actually it's a really good economic piece of data for new traders to start to work with. And why is that? Is because it's actually quite simple to analyze. So the PMI data is basically, it all centers around the number 50. So if the number is above 50, well, then that part of the economy is growing. Whereas if the number is beneath 50, well, then that part of the economy is contracting. So and you'll generally tend to see sort of three bits of the data. You'll see the composite, which is, let's say, the overall economy. And then, as what we'll see on Thursday, you'll get a number for the manufacturing part of the economy and a number for the services part of the economy. And as I said, if you're a new trader at the start of your journey, it is a very quick and simple way to take the health of economy or economic block, etc. Because you can just very quickly look at the data and get an indication of as I said, the health of the economy and what part that might play in terms of the currency in the stock market for that particular country. So I hope that helps you there, Eric. And then we've got Friday. Friday we've got some retail sales data in Canada, and we've also got a little bit of German German business sentiment data as well. So. As I said, not as heavy a week as we've seen for the last couple of weeks, but that's normally true. Normally into the kind of third and fourth week of the month, it starts to thin out a little bit. Most of the major data tends to come out the first 2 weeks of the month, and of course that can actually have an influence if you're a swing trader, or even an intraday trader. When the data comes out, can actually have an impact upon your trading plan. But as I said, I think Thursday will probably be the big day. Also after the Canadian interest rate decision on the Wednesday afternoon. So, and I say this every week to new traders. So if you've joined us here, I make no apologies, okay, if you're joining us every week. But when I talk about the data here, I don't expect new traders to be able to analyze the economic data. Okay, I don't expect you now. As I said, PMI is probably a good starting place because it's pretty simple and easy and it's pretty objective. But whilst I might not expect you to be able to analyze the data, it is exceptionally important as traders that you know when that data is coming out. That data can be found on an economic calendar. There is an economic calendar on the ActivTrades website and elsewhere on the internet. So there is no excuse not to know when the actual major economic data comes out, because that's what can induce volatility into a market. And volatility is very much a double-edged sword. Okay, when you're on the right side of it, makes your trading easy. When you're on the wrong side of it, it can make your trading challenging. So it's in your best interests to make sure you're checking the economic calendar every day. So we've looked at the news there, and plenty to get your teeth into. And of course, when we're looking at economic data, we're interested because we are looking at, well, how will that, what impact will that have upon such things as the currency of the nation or the state, or the actual the equity indexes, all right? And when it comes to looking at the FX markets, and in particular looking at something that will have an impact upon that, well, then the US dollar, really reigns supreme in terms of its importance in being able to trade the FX markets. As the slide says, many new traders will be aware of the importance of the US dollar, but may not really fully understand the significance of it to financial markets. And this is my view, and I would back this, 100 times, is that it's important for anybody trading FX markets to recognize the role that the US dollar plays. not only in FX, but in other forms of international trade and in other asset classes and in other markets. And so today what we'll do is we'll explain why the US is so important to FX trading and also how to use this to your advantage. Okay. So as I said, we sort of asked at the start, how many people really do great analysis, okay, or really sort of prioritize analyzing the US dollar. And I think Lucas or Eric said they like to look at the Dixie, and we're going to look at that in a moment. But it really is. It's my belief that if you're operating all markets, but most definitely if you're operating in the FX markets, it is important for you to have a handle on the US dollar, and we'll sort of explain a little bit more about that in the next few slides. So as the slide says, why are people interested in the US dollar? Why really are they interested? Well, what we have to realize is that we live in a dollar-centric world, rightly or wrongly. That is the world we live in. And many international trade deals are settled in the US dollar. And many international debt obligations are also settled in the US dollar. Oil, okay, is still predominantly settled in US dollars, and pretty much all commodities are priced and settled in US dollar. Now, of course, I appreciate that there is perhaps maybe a little bit of a change, and over the last year or two, we have seen an emergence of BRICS nations, and in particular, one or two other nations looking to settle their commodity deals in currencies other than the dollar. But in the grand scheme of the kind of international trade that's conducted over the world, it is still a pittance. Undoubtedly, that will change. Undoubtedly, that will grow. But we still live very much in a dollar-centric world, and all of those elements and other macroeconomic factors, they're all at play with the US dollar. Okay, so basically, if you're trading in foreign exchange, or if you're trading in commodities, some might also say perhaps in crypto as well, then you are involved in a trade with the US dollar. Hence why it becomes so important for FX traders to understand the US dollar and its relationships. Even if you do not trade the US dollar directly, although as we'll see in a few slides' time, most people do, it still has a huge bearing on the overall FX market. And so regardless of what you trade in FX markets, I do really try to stress the importance to understanding the US dollar, because invariably, it will have a huge impact either directly on your trades or indirectly. And so it's in your best interest to sort of remain on top of that. So if we look at, this is just a simple pie chart about, the most popular traded currencies in the world. And not unsurprisingly, okay, you can see that the US dollar is huge, okay, 36% there. And I suspect that probably that number is even that number still remains even just a little bit higher than that. Followed by the euro, followed by the yen, followed by sterling, then Aussie, Swiss franc, Canadian dollar, and Kiwi dollar. And many of you who will already sort of, trade FX markets will recognize, okay, that breakdown is pretty much the breakdown of most FX majors, which we'll talk about in a little moment. But, really over a third of the pie is traded, in terms of US dollar. And when you look at actual volumes, it actually starts to go, even higher. So if we look at that chart, you can see that the following ranks, okay, of popular currencies, as you can see, as we said there, dollar, euro, yen, pound sterling, Aussie, Swiss franc, Canadian dollar, and Kiwi dollar. For those of you at the start of your trading journey, when you hear traders and analysts and investors talk about the number 2 to 8 currencies, when they are traded against the US dollar, these are known as the major, all right? The majors, okay? And that becomes important later on, and you will hear, on financial media and myself and others talk about, the trading the majors. And that's what they're talking about. That is the talk of the US dollar against euro, yen, sterling, Aussie, Swiss franc, Canadian dollar, and Kiwi. Trades between the numbers 2 to 8, so on that list, they are very often known as trading the minor. So if you're trading pound against Japanese yen, that would be known as trading the minor. Okay, just so you understand it. And if you're trading outside of those 1 to 8 pairs, then that's known as the exotics. And the majority of people focus their trading on the majors and the minors, but I appreciate we have a global audience. There will be lots of people who might like to trade exotic currencies. So maybe you like to trade the sort of the Mexican peso against the Singaporean dollar. Maybe you have to do it as part of your job if you have a treasuries role, etc. But that would be known as trading the exotics as a very, let's say, a very simple rule of thumb to be able to do that. Okay, so Eric talks about SEK. Swedish krona. Okay, that would also be sort of that would not be termed it necessarily as part of the majors at the moment, although there is an awful lot of trade done in the Swedish krona and also the Norwegian krona as well. So as we've just discussed, and as we've just looked at in terms of understanding the dollar's popularity, the US dollar remains the reserve currency of the world based on what remains still the largest economy in the world, the US dollar. And as we said, commodities are priced in US dollars, okay, soft and hard commodities. So all countries need to hold US dollar in order to facilitate commodities purchases and other global trade. So there is always that demand for the US dollar. You have to remember that, okay? In the most simplest terms of supply and demand, because, commodities are priced and settled predominantly in US dollar, that means there is always a demand for US dollar. So if the US dollar is the number one most popular currency and every trade is one currency against the other, well, then, what are the most popular currencies to trade against the US dollar? So, based upon the pie chart we looked at, it might not necessarily come as a massive shock that the euro against the US dollar is, the kind of largest FX traded instrument, and I think it might actually well be the largest traded instrument, basically in the world. Okay, in terms of the amount of volume that's put through euro dollar. Then you can see dollar yen, pound against dollar, and then Aussie dollar, dollar CAD, Kiwi dollar, euro yen, pound yen, euro sterling, Aussie yen, euro Aussie, and then the others. So we can see. Let's all bring up the old drawing tool here, that we can still see that, of course, those majors are making up for almost like two-thirds of the majority of currency trading that goes in the world, and almost a third of it is the euro against the dollar. And so hopefully, as I said, this just reconfirms the idea that the dollar is it's the big gorilla, all right? It's the elephant in the room. However you wish to label it or term it, the important thing is that you understand it and that you are on top of it in terms of recognizing what you have to basically be able to understand and how to operate with it. So as we've just seen there, okay, there's no other way to put it. The dollar is the king in the FX markets, and more than 50% of trades in the FX markets involve the US dollar. Okay, so remember that. Take that on board. More than 50% of trades in the FX markets, they involve the US dollar. What we're going to focus on for the rest of our session is we're going to focus on the majors, all right, which is, as remember we were saying, is the US dollar against the sort of, let's say, the other major currency players. Then invariably, you could look at the minors. So this is, as I said, maybe you're trading euro against yen or pound against yen or euro against sterling. And then, as I said, they are the exotic. So maybe, you're the Brazilian ruble or the real or the Mexican peso, Hungarian florent, I think. If I remember off the top of my head, it's not something I particularly trade myself. What is also worth taking on board and understanding for new traders is that, unlike the stock market, the FX market has is neither a physical location nor a central exchange. Right, it's known as OTC, over the counter, runs 24/5. Okay, 5 days a week. Okay, depending upon your definition of that. And is really, it still remains that kind of the biggest, most active traded market in the world, all right? And so, depending upon the latest numbers from Basel, okay, people will talk about how the amount of volume transactions that are done within the FX markets on a daily basis, okay, and that only ever seems to grow, as of course as we get a growing and increasing global economy, but. We're going to focus mostly on the majors for ourselves, and there's reasons for that, which we'll talk about later. But, the important thing to recognize, and hopefully you realize now if you're completely at the start of your trading journey, dollar's the king in the FX market, so you cannot ignore it. And just another chart to basically sort of reaffirm that dollar is king story. And part of this is, remember what we said a few slides before, is that because commodities are settled in dollar predominantly. Okay, I know that might be changing, but it is still predominantly in the dollar. What that means is that invariably countries need to have a FX reserves. And as you can see, 60%, 62%, okay, are held in the US dollar. All of that creates demand for the dollar. All of that keeps it relatively buoyant, okay, against the other currencies. So that's all great, okay, and that hopefully that has given you an insight into why the US dollar is so important. Just in trading effects, but also just in the overall kind of mechanics of international trade. But ultimately, as analysts, traders, investors, we want to understand, well, how can we monitor the US dollar? How can we understand it? How can we analyze it? What can we actually look at? The easiest way and a good starting point is to use what's known as the US dollar index. So it might be tickered as USDX or DXY or else, but universally it's kind of known as the Dixie. And it is the measure of value of the US dollar versus a basket of currencies. And that basket of currencies, as you can see there, is Euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and the Swedish krona. And really, the value of the index is a fair indication of the value of the US dollar in global markets. So it's against the basket of currencies, but I think it's about 57% of that basket is made up of the euro. Hence why the understanding the dollar index chart can give you a really good insight into the euro dollar chart. The euro dollar chart is almost like the inverse chart of the dollar index, which we will look at in a moment when we look at the live charts. But as I said, the starting point is to understand the dollar index. So here's just a weekly chart. Okay, you'll find this on the ActivTrades platforms, USD, and then it'll be at the quarterly contract ahead. Okay, so this is for December 24. That's the near contract, and this is a weekly chart. Okay, it's a weekly chart, and what I'm interested in is hopefully you can see that back in 2021 and 2022, we had huge amounts of dollar strength. Okay, really was on an absolute tear. But then since then, we dropped off there, and then most of 2023, and I would say just so far 2024, we have mostly been in a range here. Okay, and one of the big things, I'll just get the old drawing tool here. One of the big elements is the big round number of 100, and hopefully you can see. Okay, hopefully you can see here that the price has quite a relationship with that big round number. Okay, and so what we have seen, okay, and we'll look at it a bit more depth, is we saw for the last couple of months a bit of dollar weakness there across the board, but actually over the last 3 weeks or so we've seen some dollar strength. Okay, and we've drifted back, and that 100 number has acted as a real strong level of support, as it has done in the past. So even though the dollar index is a reflection of a basket of currencies against the dollar, it still holds up well to just good standard technical analysis of charts, in the same way that you would analyze euro dollar, or you'd analyze pound against yen, etc. So hopefully that just gives you a little bit of insight. Okay, the dollar index chart, it is available on the ActivTrades platforms. Okay, you'll see there. So make sure that you make available, especially if you are trading FX. Even if you're trading, let's say, pound against yen, or maybe you're trading euro against Swiss franc, etc. It is still, as I say, my recommendation that you keep an eye on and keep an understanding of the dollar index, and to give you an understanding of whether we're seeing strength or weakness in the dollar, because that in itself will have huge knock-on impacts across all foreign exchange markets and commodities markets. So the dollar index is the primary way that I would suggest most traders are able to monitor the US dollar. There would be other traders that would look at things like bonds, okay, 10-year bonds, okay, in terms of prices and yields. But one of the other ways, okay, to monitor that we can look at is to monitor the emerging markets, and you can do that with a chart of what's a ticker called EEM, which is the emerging markets index fund. So this is not on the ActivTrades platform, but you will find it on the internet, and we're using it as a just as an indication of the one way to understand the strength or weakness of the dollar and how it's reflected against emerging markets. And as I said, I appreciate we have a truly global audience here, so you may already be tracking it. Maybe you're not, but hopefully you will do after today, because it's quite a useful and interesting tool. So, as I said, EEM is the ticker. It's the iShares MSCI Emerging Index Fund. Why would that be of interest to us if we're looking at the dollar? What relative interest would that be? Well, if you remember earlier, we talked about how not only commodities are settled in dollars, so countries need to have considerable dollar reserves to be able to engage in international trade and commodities trading. Also, what you'll see, as members have said, is that many debt obligations are also settled in the US dollar. So, if you are an emerging nation and you have a large debt obligation, that debt obligation is settled in dollars. If the dollar is strong in the global markets, well, that means that invariably it's going to take more of your own currencies to be able to meet your debt obligations. And if that means it's taking more of your own tax revenues, that means that's tax revenues that are not able to be used for your own domestic agendas. If you're a government looking to look after your people and keep in office. So this is where it starts to become interesting to see how whether the emerging markets index is almost like a inversely correlated with the dollar. So when the dollar is strong, that has a knock-on negative impact on emerging markets, and equally when the dollar is weak, that has a positive relationship with the emerging markets index. Okay, and so as I said, this is just another way that you can help build a picture about understanding the strength or weakness of the US dollar. And this is just the weekly chart. And remember I sort of talked about how in 2021, 2022 we saw real strength in the dollar index. Well, as we saw real strength in the dollar index, we saw real weakness in the emerging markets index, and so it's just helping us build that picture. Then invariably, for a good part of the last 12 to 18 months, we went sideways in the dollar, and really we went sideways in the emerging markets. Look at how that 20 and 50 period moving average there, they are wrapped up. They're wrapped up with price. That's always an indication of a range-bound consolidated consolidated instruments. But then what we saw was we did start to see a little bit of weakness in dollar, and then a little bit of strength in the emerging markets index, that inverse correlation. But what we may be seeing for the last couple of weeks is maybe a bit of strength in dollar, and will be interesting to see whether that has an impact in terms of the emerging markets index starting to fall. So as I said, they are inversely correlated, and it's just another way that you can help just build a picture about managing an overview of the dollar itself, and that it actually starts to help confirm your analysis, okay, in terms of the sentiment with the US dollar. And it'd be interesting to know of those people here today, okay, joining us who've got experience of trading US dollar. Is emerging markets index, is that something that you look at yourself in terms of keeping an eye on top of the dollar, or is that new information to you? Could you see how this could be useful to you, how this could just be another tool to help you analyze global markets and understand some of the flows and some of the nuance of the certainly of FX markets and US dollar in particular. Hopefully, as I said, that's just giving me a little bit of insight, a little bit of something that you can take away and utilize in your own trading journeys. So Luca says, this is great to find divergence in correlation. It's new to me. That's great, Lucas. Okay, and that's great. That's part of all of these sessions is helping just provide a little bit of insight, just a little bit of additional education tools that you can take away and utilize straight away in your trading. Eric says yes, it's another tool he uses, but it's a good one. That's great, Eric. Okay, it's great to hear that the kind of messages out, and hopefully those new traders here, you'll be able to add this to your list just to, as I said, just help you build a picture of the overall dollar. So we've had a little look at why the dollar is important, and we've had a little look at ways that you can analyze and keep on top of and understand the dollar. But of course, naturally, as traders, ultimately we really want to know, well, how do we use this information? Why should it be important to me as a trader? Why should I focus on one asset class over another? Okay, ultimately that's what we're here for, isn't it? To try and help with that. One of the reasons we talked about focusing on the US dollar majors is that they are actively traded pairs. You saw yourself, 60 odd % of the trading in FX pairs is in pairs utilizing the US dollar, utilizing the US majors. The important thing for that is that actively traded pairs, they have higher liquidity, right? Because just by the very nature of the amount of traders operating in those markets. And that interest usually means it is easier to buy and sell in those FX markets. What does that really mean? Well, higher liquidity generally equates with lower commission costs, okay, for your trading, and that also generates good trading conditions. So things like lower spreads, minimum commissions for rolling over positions or swaps if you're a longer term swing trader, etc. There's little or no commissions for when you open a trade, and also you generally get fast and reliable trade execution. Now, of course, at the start of your trading journey, where you may be trading very small, very small, account, okay, as you learn your trade and as you hone your craft, that may not necessarily be, let's say your number one priority. But as you build a business, as an FX trader, as you develop, okay, and experience and skill levels, well, then, these things become a cost of business. And so it's a great way to start in terms of being on top of your trading business, managing those costs, and by providing yourself with the opportunity to trade relatively easy in actively traded pairs that have high liquidity. And in the FX world, that means the FX majors. So that is one of the reasons why we're, suggesting that if you're a new trader, even just starting out with the FX majors is a good place to be. What it also means is that those actively traded pairs means that there's more focus on those currencies, which means you get more analysis and more expert opinions. I would also suggest that sometimes that can actually be just as much of a hindrance as a benefit, because of course if you've lots of different opinions, they all might be very different and they might counter each other. Nevertheless, as a starting point, it means that you can access analysis. You can also find forecasts, trade signals. Okay, for they tend to be, more of them are published for the more popular pairs. You also get more focused coverage of events in the news and the media, financial media, relating to those actively traded pairs. And not unsurprisingly, there are also more trading guides and more education-focused pieces on those particular pairs. So, there is a benefit, as I said. There's multiple benefits in terms of just looking to focus on the US dollar majors. What also can be a good benefit is also around about timings and geography. Now, of course, what can impact many popular currencies is also the time to their particular geography. So, of course, I am very fortunate here. Based on the sort of London time zone. And the European session remains the main FX trading session, okay, between 0700 London time and 4 p.m. London time, followed by the US session. And very often you see a very popular time for trades in general, but also FX trade is approximately sort of 3 to 4 o'clock London time, just as what we're coming into, because here is where you have an overlap of the Euro and the US session. So the European session is drawing to a close as the US session is starting to get going. But it is useful knowledge for traders, as I said once again. I appreciate that we have a truly global audience who join us, and being able to understand that and recognize the kind of timings for those FX market sessions. There is an overlap time, which we're in right now. And for those of you joining us for the live session, overlap between London and New York. And then we'll go into Sydney and Tokyo Asian session until tomorrow morning, when we start to see Frankfurt open at sort of 7 o'clock London time. So, there are many trades. So, for example, euro against sterling, you'd probably be wanting to do most of that trading during the London session, just because you've got two European currencies. In the same way, trading something like the Aussie yen, okay, the majority of that trading would take pair in the Sydney and Tokyo session. So, a lot of those have their greatest volume and volatility throughout particular market sessions, whereas the FX majors, for the most part, have enough volume, enough liquidity that you're able to trade them with relative ease throughout the sort of the 24-hour trade cycle. So why don't we turn this into a little plan that we could follow, okay? We've looked at why the US dollar is important. We've looked at how we can analyze, okay? We've looked at why the FX majors are key and a good starting point. But of course, naturally, we want to be able to turn this into a trading plan, don't we? So I always suggest, and those of you who have joined me on a regular basis, that you have a particular US dollar profile on ActivTrader, MT5, MT4 platforms. And then from that, identify kind of levels of support and resistance from the daily chart, and also look for correlated trends within those US dollar majors. Identify if there is a dollar trend, and naturally, for new traders, look to trade in the direction of a strong dollar trend. Maybe it's a strong bullish trend, okay, as it has been for most of this month. Maybe it's a strong bearish trend, like it was for earlier in the summer. You can trade either breakouts or pullbacks for your entries, and we talked about whether to trade breakouts or pullbacks in one of our earlier sessions, which will be available on the ActivTrades YouTube channel. Will also be on the webinar archive. And then what we're looking to do is using simple price action candlesticks for triggers to be able to trade the dollar trend. As always, we ensure that we're managing risk. You never trade without a stop loss. You never risk more than a small portion of your account. But as a very simple starting plan for those of you at the beginning of your FX journey, creating a dollar profile that focuses on just the FX majors is a good starting place to be. So let me just bring up this drawing tool here. So this is, and we'll look at my live dollar profile in a moment, all right? But, we can have my dollar index in the bottom right, and then you can see I've got Aussie dollar, pound dollar, euro dollar, dollar Swiss, dollar yen, dollar CAD, Kiwi dollar, all of the majors and the dollar index. And so very quickly at one glance, I can normally very quickly tell if there is a strong dollar bullish trend or a strong, dollar bearish trend. Or maybe there's volatility. Maybe it's going through a transition. In which case, once again, I take that on board, all right, because it will stand out across the charts. And that's I want to make my life as easy as I possibly can for a trader. I don't want to fight the market. If the market is in a great trend, well, I'll look to trade with the trend. If the market is undecided, if it's transitioning, well, I will go and find something else to trade. All right. There is no need to be a hero as a trader. Okay, no need whatsoever. So here's kind of some takeaway points for you before we look at the live charts. As I said, if you're new to trading FX, my suggestion would be you focus on trading the majors, as we've discussed, because there's lots of liquidity, usually enough volatility for your trades, regardless of whether you're a scalper or whether you're a position trader. You have tighter spreads because you have good cost of business. And then also there's plenty of research, okay, plenty of guidance on those majors. And effectively, if you do that, well, that makes you a dollar trader, US dollar trader. And that's absolutely okay, because in many ways, it makes it easier for you to follow formal news because you're just looking for pieces of news that will have an impact on the US dollar. and there is plenty of research on the US dollar for you to study. And so what happens is it makes it easier to avoid overwhelm. I sometimes find new traders, they try to trade everything. Okay, so they want to trade indexes, they want to trade FX, they want to trade commodities, they want to trade equities, they want to trade cryptos, they want to trade bonds, okay, because they're excited and they're fascinated by markets. When actually what happens is very often they will become overwhelmed. Sometimes as a new trader, it can help just to focus, just doing one thing well. And if that meant you become a US dollar trader, focusing on the majors at the start of your journey, and you did it well then what you'll probably find is that actually that can take you very far in your trading journey itself. Okay, so just to conclude before we switch to the live markets, all right, remember, Money Market Matters is here to support you in 2024 every Monday, okay, 2 o'clock London time, where we'll focus on some news, education piece like we've talked about, have a look at the ActivTrades tools and live markets. I say this every week now, okay, at the start of this year, I said it's going to be an interesting year in markets, and I think it really has been, and I suspect it might still be interesting for the next couple of months as we run in towards the end of the year, and so I hope you'll join us to enjoy that journey together. Remember, the US dollar is king when it comes to not only the US markets, but FX markets as well. And it is important to commodities, to fixed income and debt markets. So as an FX trader, you need to ensure that you are on top of the US dollar. And the easiest way is to do that is following the dollar index, the DXY. You can also use the emerging markets fund. And what I suggest is for beginners is, maybe just focus on the majors to begin with, okay, for the reasons that we just talked about on the last few slides. And that is a good starting point for you as a trader. Okay, before we switch across to the live markets, okay, just a reminder that we'll be here next Monday as well, 2 o'clock London time. Next week's educational piece will be on how to trade price action combinations. That's kind of a fascinating element, sort of combining a couple of the price action triggers that we've talked about in previous sessions that you'll be able to find and have access to, okay, on the webinar archive and the Admiral's YouTube channel. I hope you'll join us for that. Speaking of which, okay, you have the ActivTrades are on YouTube, okay? We have the ActivTrades YouTube channel. I hope that you will all go. I hope you'll subscribe, okay, and follow. And what you will find is that the videos of this will also be put onto the ActivTrades YouTube channel. So it might be sort of 3 to 5 days later, depending upon the how quickly we get through all the through the content, but it will always go on there. Okay, so by all means, go on to YouTube, find ActivTrades, subscribe, and then of course you'll be alerted when the next videos are. I appreciate that sometimes I try to cover as much as I possibly can in these sessions, share as much value as I can, but equally I do recognize that sometimes it helps people to be able to watch the videos a couple of times just to maybe garner all of the useful value in these particular sessions. So be sure to do that. And before we switch across, just remember, if you've got any questions about ActivTrade, you can get in touch with your account representative. You can call them on the London number there, or if you've got questions, comments, feedback about today's session, or maybe even if you have suggestions about what you'd like to see me touch upon in future Money Market Matters webinars, well then get in touch with us on either the English Desk telephone number or email englishdesk@activetrades.com, and we'll be glad to hear from you. Okay, so I hope that you can still hear me, and I'm hoping now you can see the ActivTrades platform. It might look a little bit scruffy to you because I've just got so much going on here. Okay, that's the nature of being a trading analyst. So let's bring up the old drawing tool here, and so I can just help explain this to you, because I appreciate some people join us every week, but some people might be new to us. So I have set up on my platform here. This is a US dollar profile. Okay, you can see it there, and as I said, in the bottom right, I have the latest US dollar index, and then I have the other majors here as well. So I've got Aussie dollar on the weekly chart there, Euro dollar on the weekly, pound against the dollar on the weekly, dollar against the Swiss franc, Kiwi against the dollar, dollar against the Canadian, dollar against the Japanese yen, and I have a few others of the exotics, which we'll look at in a moment as well. So very quickly, I can start to just take a quick snapshot of what's going on with the dollar. So let me just tidy this up, put it into a little bit of a better setting. So hopefully you can see there what's going on. Gosh, just bear with me one moment. Okay, great. So let's have a little look at the dollar index. Remember what I was saying, okay, when we looked at it a little bit earlier, I was talking about, this is the monthly chart now, we had real dollar strength. We had a nice double bottom there, and then real dollar strength, okay? Dollar strength, where at the same time we were seeing weakness in the emerging markets index. And then if I go to the weekly chart, we ran out of steam. We had a real great sell-off. And then really, you might say for almost the last 2 years, almost nearly, we've kind of just gone in a range there between about 100 and about 107. Okay, that's what I'll be looking at. And then if I go a little bit, if I drill in a little deeper, what we saw was, having got up to the highs of last year, okay, we rolled over and dropped, and there was a lot of dollar weakness there. And that dollar weakness stopped at the big round number of 100. Big round number of 100. And you can see there was support there, bang, 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 bang. And then we're blowing our way up. Bosh, there we go. And we've traded from 100 up to, we are just tickling the soft underbelly of about 103.70. We're up here at the weekly 50-period moving average. So we have seen strength there. On a bigger picture, and I was talking about this at lunchtime myself, my own clients, is namely, this could be a reflection of the market starting to sort of prepare for a possible Trump election victory. Okay, they would see that as being, pro-Trump, okay, or pro-business, certainly, if Trump wins, and then invariably that has knock-on implications as well. But for the moment, what I just want to be able to see is just that dollar chart. And if I go down to the daily chart, here we go. Oops, dollar chart, okay. So here we go. Just, as I was saying a bit earlier, for a good couple of months of the summer, we had real dollar weakness. Okay, the dollar was in a great trend. So remember, if the dollar is in a weak trend there, how was that likely to be looking against the other majors? And then we had a kind of what I would probably call quite a distinct bottom there. Okay, all centered once again around that big round number of 100. And then look what the dollar's done this month, okay, on the daily chart. We've gone from, as I said, 100 up to about just under 103.70. We're at the daily 200 period moving average there as well. So, that has been quite some move, hasn't it? And, but naturally, for me as a trend trader, of course, when markets are in nice trends, I want to trade with them. I don't want to fight it. But remember what I was just saying here, okay, about understanding the relationship between the dollar index, and other currencies. So if we look at that for the last few weeks, there on the weekly chart, the dollar index has been strengthening, which means the dollar strengthening. If I look at the dollar Swiss franc, the last few weeks, what's that been doing? Dollar strengthening, Swiss franc weakening. Remember, we looked at euro dollar, which is the kind of largest traders instrument in the world. Dollar has been strengthening. So what have we seen? Euro weakening, dollar strengthening. Aussie against US dollar, which has also been strong the last few weeks. That is Aussie weakening, dollar strengthening. Kiwi against dollar. Kiwi dollar weakening, US dollar strengthening. US dollar versus Canadian dollar. US dollar strengthening, Canadian dollar weakening. Even pound against dollar the last few weeks. Pound weakening, US dollar strengthening. Dollar against Japanese dollar strengthening, Japanese yen weakening. So I'm hoping that, very quickly you can see by setting up a profile like this, and it's very easy. It's not hard to do at all. And, having it as a dollar profile here, very quickly, I can just take a quick look at there. Now, admittedly, most of my trading is swing trading. Okay, I'll do intraday trade, but most of my starting point is swing trading. And very quickly with a profile like that, I can take a quick look and say, well, is the dollar strong or weak, or is it asleep? Well, it's most definitely being strong. And that strength is reflected against all of those majors. Okay, all of those majors are showing that dollar is strong, okay, and has been for the last few weeks. So would I want to fight that? All right, would I want to fight that trend? And the answer is no. By all means, if you wish to fight the trend, you're welcome to, but your chances of winning, they reduce enormously. I'm not saying that you can't, but more often than not, as a new trader, what you want to do is to find a trend, and as I say, just find a way to capture a piece of it. You don't have to capture the exact turning points, the exact reversals. You don't have to try and capture the exact tops and bottoms, because that is a bit of a mug's game. As I said, even if you can just understand when the dollar's in a strong trend, is that reflected in the other majors, and is there a way for me to be able to trade that? Okay, so for those of you joining us here today, could you see that? Hopefully, based upon what we've covered on, talked about earlier, and talked about the relationships, could you see that how that is a really good starting point for your FX trading, to be able to just look at the dollar profile, get an indication of what is the dollar strong or is it weak, and if so, is that confirmed by the majors? Because that is that's a good starting point for you to work from. Eric says, unfortunately, I have to leave early. Thanks for a great meeting. Yeah, you're very welcome, Eric. Thanks very much for being here. Thanks very much for your engagement, okay, and your help. Thanks everybody else. I hope you've been finding it useful. It's just a little bit of a yeah. If you've got a hand up, I'm very happy to take questions, but just please just put a question in the chat box, and I will try and help if I can. So there we have the dollar. Now let me just clear these drawings down, because what I also have here on my dollar profile is I do have one or two of the exotics, etc. So I have, for example, the US dollar against the Chinese yuan, the offshore yuan. And this is the weekly chart. Let's go to the monthly chart. And the reason being that, of course, in the US dollar and the Chinese yuan, we have the two largest economies in the world. So, of course, I'm always intrigued. I don't trade this, but I use it as let's say, a barometer for where the strength and weakness is in between the relationship between the US and China. Okay, and so you can probably see there where there has been indications of strength and weakness, and actually how the big number 7, okay, 7 on the dollar Chinese yuan, it tends to be a number of a significant number, okay, and we've been trading above it for about a year, okay, but it's just an indication of as I said, the relationship between the US and the China in terms of the economy and in terms of the currency. Perhaps what's more interesting, useful to us in the moment is this. This is the US dollar against the Mexican peso. Once again, I talked about this at lunchtime in my own session. Why would this be of relevance or interest to us at the moment? Part of that is, of course, as we run into the election, and we're looking for ways and means to basically give us, can the markets give us any kind of hint or indication of who might be the likely victor? What we're seeing here is we're seeing a bit of a change here. Okay, now for those of you who have been trading long enough, might remember the last run up to the last election. Okay, or rather the first election that Mr. Trump was involved in. Mr. Trump came out and was clearly very how should we say it, very stringent about his ideas about the tariffs on companies that were trying to import into the US, or companies that were basically looking to move their factories out of the US. He was very much trying to encourage manufacturing companies to move to the US and build their factories in the US, so in order to sort of bring jobs back to the US. And so, of course, there is a relationship between US and Mexico. An awful lot of companies have their factories in Mexico because of cheaper labor. And so when Mr. Trump was talking about these tariffs, well, invariably what we saw here was a real kind of major move in terms of dollar strength and Mexican peso weakness. And there were other contributing factors to that, but that was the kind of Trump victory was the major element. And then once that happened, actually what we saw was this the monthly chart. Price actually just kind of coiled up for the next few years, and then invariably what we had was this was kind of COVID. And then we dropped down here, as you can see, as Mr. Biden came in, we saw invariably dollar weakness and Mexican peso strength. But what we've seen in the last couple of months here, just take a note of that, is look at how that has strengthened once again. Okay, and we're now back up to the big round number of 20, and that's where we're sort of kind of pivoting and bouncing around. It's a number that is kind of clearly significant to traders and to businesses in US and Mexico, and people will be looking at, well, is this an indication, this kind of indication of dollar strength and Mexican peso weakness? Is that an indication of Trump's likely victory in the election? So US dollar Mexico, I will be watching that acutely over the next couple of weeks, because that will be giving us indications of people's sentiment towards the US election. And so with the dollar Mexican peso and with the dollar index, okay, with the emerging markets fund, all of those together can start to help give you just a little bit of a sense of the US dollar, okay, and what it's looking to do, and that is very useful for us as FX traders. It all goes toward building us a picture of where that dollar strength is, okay, or is it strong or is it weak, and that's most definitely what we're seeing there. Even if I just look here on now what I want to mostly focus on is, of course, the swing trading, but I do recognize that there are lots of traders who join us here today who are predominantly it might be intraday traders, might like to scalp, might be thinking, well, that's all great for swing trading, Paul, but does it have any relevance for intraday trading? And my answer would be yes. Okay, in the same way that the dollar index on a weekly chart and a daily chart can give us indications of strength. Well, it can also do that on a intraday basis. So today, this is the 30-minute chart of today's session, and as we came into the European session, we strengthened, okay, and as we strengthened there, we strengthened against the Japanese yen, we strengthened against Kiwi dollar, which meant we were dropping, we strengthened against Aussie dollar, which meant we were dropping, we strengthened against the euro, which meant that we were dropping, we strengthened against the dollar against Canadian dollar, which means why we're rising, strengthened against sterling, okay, and strengthened even against the one thing we didn't actually was we weakened against the Swiss franc, and that's probably an indication of some Swiss franc strength there. But as I said, regardless of whether you're on the intraday time frame or whether you're on weeklies, dailies, etc., then it's a case of understanding the relationship between the dollar index and the majors is a great starting point for traders in terms of being able to just build a simple plan that you can basically work with at the start of your trading journey. Okay, there, ladies and gentlemen. So I'm afraid we've run out of time. As I say, time flies when you're having fun. I hope you have found today's session useful. I hope it's given you a great insight into the importance of the US dollar, how you can recognize the importance of dollar, how you can track that, and how you can turn that into a trade plan. And of course, I hope that's useful as well. As I said, as we go into the next few weeks looking towards the US election, invariably people are going to be focused on the US dollar in particular. As always, I wish you the very best of success in your trading endeavors this week, ladies and gentlemen. I hope you will join us next week for Monday Market Matters, where we talk about trading price action combinations, and have yourselves a great trading week, everybody. Take care. Cheers.